Markets head into the North American session with risk appetite recovering and the US dollar selling off after Friday's stronger than expected US jobs report and another flare up in Middle East tensions. While the hot May payrolls print and renewed Israel Iran exchanges contributed to the risk off move, sentiment has improved notably as ceasefire hopes regain traction and investors view the early week reaction as at least partly overdone. This shift is visible across assets. US equity futures are trading modestly higher ahead of the open, with NASDAQ futures outperforming on a tech rebound. The US dollar is pairing some of its post NFP gains as safe haven flows ease, while oil prices have pulled back from weekend spikes amid de escalation signals, including comments from President Trump urging an immediate ceasefire. In FX, attention is pivoting from geopolitics back toward central banks and inflation. The robust labor market data reinforced views of a resilient U.S. economy and prompted a hawkish repricing of Fed expectations, with some banks pushing back easing forecasts. Markets now look ahead to Wednesday's U.S. CPI report, which is expected to show firmer headline readings due to higher energy costs and will be pivotal for whether further tightening bets build. Elsewhere, Japan's stronger than expected GDP revision supports the Bank of Japan's gradual normalization path, even as wide yield differentials continue to favor dollar yen. In Europe, June sentiment indicators showed modest stabilization, providing some relief on growth concerns ahead of Thursday's ECB decision, though elevated energy prices keep the inflation outlook challenging. Today's calendar is relatively light, leaving room for headline risk and positioning flows. The key focus this week remains Wednesday's US CPI, the Bank of Canada decision, and Thursday's ECB meeting. With inflation likely to stay sticky due to energy, the market will test whether the recent recovery in risk sentiment can broaden or if global policy repricing regains the upper hand. That's all for now.